Hi. So everybody's probably wondering what is going on. Stock market was down 1,000 points this week, which even though it's not that great a percentage, is still enough to cause the dip buyers some worry. And they should be worried. This is just the beginning. We're heading a lot lower, and I'll show you some scary charts. You may know that Apple is one of the most popular stocks in the world, and that it was added to the Dow Jones Industrial Average. Well, look at the chart to my left. That's Apple monthly bars. Now, if you look at the stock market since 2009, it's basically mirrored the Apple rise, except Apple went up 14 times, and the general stock market went up 3 times, from 6,000 something to 18,000 something. Apple went from 10 to 140. When you look at this chart of Apple, it seems possible that Apple gets back to $10 a share. I know that seems incredible. I know Apple is the darling of all darlings, but it's a warning to you guys out there. And as I said, the stock market looks exactly the same. Uh, I can't, it seems hard to believe today that it could lose two-thirds of its value, but we lost 1,000 points today. We're back under 17,000. We're closer now to 16,000 than to 17,000. And I caution you that you should not listen to those who would tell you don't panic. It's always been a good idea to not panic. It hasn't always been a good idea to not panic. If you had panicked in 2007, 2008, even as the stock market went to new highs, if you had panicked because you realized that the loans that were being made were ridiculous, ninja loans, no income, self-declared income, no verification, low down payments. I mean, if you think about it, if you buy a house for $100,000 and you sell it immediately thereafter, you're out about $6,000 in sales commission, plus your costs of moving in and out of the house. Easily $10,000. 10% of $100,000, 5% of a $200,000 house. So, don't be so fooled into thinking that, common uh, perceived wisdom is valid. Everybody has an interest in the status quo, especially those people who are employed by the status quo, and that includes everybody whose advice you're seeing on television or reading in the newspapers. So, as I was saying, I think the market is heading a lot lower. It certainly is reinforcing to have such a nice move after making my call of last week. But even though we may see rallies, and we will see rallies, those are to be sold if you have the nerve. But I think we're going a lot lower, and you should position yourself accordingly. Here's something positive. Gold. Gold has rebounded a lot. It's currently, I think, 1150 odd. But it should be a lot higher. And if you look at the chart above me, you'll see why I think that that's the case. This is the Singapore Gold Exchange, where it's not really paper that's traded back and forth, but it's the actual gold itself. The amount of paper that has a claim on the amount of gold on the American commodities exchanges, I think 124 entities or individuals have claim to each ounce. So think about that. There's 124 people who each think that they own the same ounce. They believe that if they wanted that ounce, they could get it. I don't think that they can. But if you look at the Singapore Gold Exchange, this shows this chart shows how many tons of gold are being withdrawn monthly. And you can see that these blue bars are the monthly deliveries, and the black line is the cumulative deliveries. It's 10,000 tons, 9,773 tons since '08, which is basically since our crisis began. Not we've transferred. The East has taken 10,000 tons of gold. The West has been a seller. It seems crazy. We're hearing negative publicity about gold. One of the ones I heard recently that was quite entertaining was that gold was valuable in the same way that a pet rock was, only because people thought it had a value. When you first hear that, it does seem as if it might be a credible claim. After all, it is only because we accept its value amongst ourselves. But then when you realize that it costs $1,100, $1,200, $1,500 an ounce to extract an ounce of gold from the earth, then you realize that it's not the same as a pet rock, which really has no value because you can pick one up in the street, but you're not going to be able to pick up gold coins in the street. And increasingly likely, you're not going to be able to pick up gold coins anywhere. The mints in Canada and the US are curtailing deliveries, there's less being produced and there's more demand. It's actually caught some bullion dealers out. There was a big bullion dealer recently that, expecting to get their normal delivery of coins, had sold it to customers, and when it turned out that they weren't going to be getting that delivery after all, they defaulted and it put them out of business. So I would say the path forward seems clear. Real assets and not the paper assets. When I say buy gold, I don't mean GLD. When I say buy silver, I don't mean SLV. When I say sell the stock market, I don't mean a small company that is not covered by the market. I'm sure there's still pockets of value in the micro cap area, but in terms of the stock market as a whole, the indexes, the Apples, oil is trading $40.24 right now. What does that tell you about the demand for energy in the system? Don't listen to the people out there who tell you that everything's fine. It's not fine. It's far from fine. It hasn't been fine for a long time. The government debt has increased. I think it increased under Greenspan from $2 billion to $12 billion. I'm recalling those figures. I'm not sure if they're accurate. Well, think about how much better things would seem if you borrowed an enormous amount of money. Things would seem great while you had that money. But the day comes when, either through the costs of paying interest on that debt or through the fact that the lender finally wants some principal repayment, the day comes, a day of reckoning. And we've papered over our problems here for too long. It's like if you have a brother-in-law, or let me rephrase that. If you have a relative who is profligate, who spends money, who is not able to make money, and this person has a credit card, and they have a lot of credit cards. They have a lot of credit. They're considered a very, very good credit risk. So they're able to borrow a lot of money and have no difficulties as long as they're able to borrow money to pay back the money as it's due. The day comes that that person or entity has to finally face the music. And the more credit that's extended to them, the longer that they're allowed to kick the can down the road, the worse it will be for them. And sadly, that's the case also for countries. It's outrageous that our government and governments around the world are able to indebt us with our blessing. We are the ones who will be producing the income that they're relying upon to repay these loans. Why is there no outrage at all these loans? We can't afford to have any more debt. We can't afford the debt that we have. The markets are finally waking up, it seems, finally waking up to the fact that reality is rearing its ugly head. The facts are about to hit the fan. Get ready.